numbers flashing on your screen. The wholesale inflation coming in at 2.37 compared to 1.89 in the month of November. So the December figure at 2.37. Mind you, the retail inflation numbers that were reported yesterday were better than expectations. They were down on a month-on-month basis. The wholesale number, though, has come in higher on a month-on-month basis. The food inflation continues to remain stagnant. There is no change on a month-on-month basis, still continues to remain around that 8.9% figure. So that will be a key monitorable to watch out for as to what the RBI does next when it comes to its next rating action. Fuel and power inflation now at a negative 3.8 compared to a negative 5.8 on a month-on-month basis as well. So WPI numbers higher on a month-on-month basis.
Higher on a month-on-month basis, led by two things in particular. One is fuel and power, where the deflation has come off a bit, as we've seen that in the kind of spike that we've seen in crude prices as well. And the second part is primary articles. That too, the inflation has come in at 6.02% versus 5.49% in the month of the previous month itself. So we'll keep an eye out on that. And apart from that, we did see the food inflation stay sticky. Aditi Nayar joins in. She's the chief economist at ICRA. Aditi, of the CPI that came by yesterday and the WPI that you're seeing right now, what is your sense?
Well, certainly today's WPI numbers have come in a little lower than we were expecting, whereas yesterday it was the reverse. The CPI was a little bit higher than what we had forecast for the month of December. Now, looking ahead, my sense is that the WPI is going to continue to climb, whereas the CPI will hopefully continue to moderate. So the directions will be quite different for these two indices in the near term, and a little bit of kind of trend towards convergence that we would expect between the CPI and the WPI going ahead. Food prices in the current month are quite benign, particularly for vegetables, so that's good news. At least one of the things that has been keeping our CPI inflation very high, that pressure will be coming off. And the Rabi sowing data isn't looking too bad, so that's a positive as well. Big concern, of course, going ahead, particularly for the WPI inflation, maybe a little less so for the CPI inflation, is what happens to the rupee, as all analysts and economists are looking at the kind of movement that we've seen in the last few months, and where the rupee will settle going ahead.
Okay, hi Aditi. The WPI inflation is quite a benign number at 1.89. Even the CNBC-TV18 poll was 2.4%. So it's like lower than the previous year, and it's 2.37. Okay,
1.89 was the previous.
Then it's pretty close to the poll. Okay. That removes at least the fear that there could be deflation in certain areas. That was what I was going to ask Aditi. Okay, that makes it a little different. But do you think going forward there can be a kind of a deflationary bias, given that it is expected that China will continue to be a deflationary force? They themselves are not growing enough, and they are a huge exporting country ready to undercut any price. So do you expect WPI is going to remain a deflationary force for now and for the rest of 2025?
So Latha, certainly a couple of things that I do believe WPI inflation, even in FY26, for instance, is going to be lower than the CPI inflation. So that will continue from both points of view, that the CPI reflects more of domestic factors, whereas the WPI reflects more of global traded factors. And of course, the fact that the weight of food is much higher in the CPI than in the WPI, and that's been a source of concern for a long time now. Beyond that, I think a couple of factors that will keep us worried about the WPI. One is where crude oil is going to settle with all of the global uncertainty. And secondly, of course, where the INR itself is going to settle. Other commodity prices, definitely your point is very valid that, the China factor is going to be the big driver for all other commodity prices other than crude oil. Of course, demand from China is very important for.
My short point is that what is your average expectation of WPI for next year? Have you already calculated that, or do you have a view on whether it will be lower? Because CPI, clearly the RBI's forecast is it's averaging 4.3% next year compared to 4.8% in FY25. what's the delta for WPI? Higher, lower?
So we're at around 4.2% for CPI for next year. WPI, highly volatile, but I would expect it to be maybe in the 3 to 3.5% range for next year.
Okay, so that will have a bearing on what kind of a nominal GDP the budget can look at, right? If growth is also going to be sub 6.5 and inflation also is going to be, you know, as weak as you're saying, you know, under 3%, then you can't have a very good nominal GDP when you forecast on February 1st. Is that right?
So 3 to 3.5 for WPI and about
3 to 3.5. Okay.
Yeah.
Okay, so
4.2% for CPI. So the average for inflation would be still between 3.5 and 3.7%.
Okay, then just more a final question for the market. With this WPI already in 2.37, these are the last inflation numbers the Reserve Bank is going to get when it goes to making policy on February 7th. What's the expectation?
Latha, this is becoming really very complicated policy decision in my mind. We've got inflation where things are looking a little bit more comfortable on the CPI side. We've got growth numbers where Q3 was not as bad as Q2. That's what all the high frequencies are telling us. And then we've got an exchange rate where we've seen the kind of movements in the last couple of days, which are a little unsettling. And what is going to be the impact of that on the inflation and on the growth dynamics? And how does each MPC member sort of, you know, what is their balance for inflation and growth and the exchange rate and the overall policy framework? My sense is that we can't rule out a rate cut in February itself, but the probability of that is going down quite rapidly in my mind. We, of course, will also have the budget before the next policy decision, and that will be another big thing for monetary policy to look at before taking the decision.
Okay, so you're saying that it could go either ways?
Yeah.
Okay, all right, we'll leave it at that. The key takeaway from Aditi is that it's going to be a benign WPI. I mean, maybe 3% next year also. Going by the trend, it looks like even that stuff, and especially the geopolitics, is pointing towards lower, you know, several commodity prices. Well, I can understand the ambivalence in terms of what to expect from the governor. The key point that Shaktikanta left us with is that he wants to see CPI aligned to the 4%, which more like I want to see 4% on the table before I cut rates. It's quite possible that the new governor can tweak that and say that I can see 4% 12 months down the line. It takes interest rates that much long to work their way into the market. So I'm comfortable cutting now. You know, that position can very clearly be taken, and a new governor does bring his own narrative. There will also be a new deputy governor. Interviews are going on, and we'll probably get the announcement tomorrow or day after.
And before that, we'll have the union budget as well. So what happens through the fisc is something that will have an impact on what the monetary policy does as well.
Going by the behavior of the government, they're very, very conservative about the fisc. So I don't think that 4.5 is... I mean, yesterday's town hall, the key takeaway was no, 4.5 will not be altered. So assuming that is a constant, the chance of whether there will be a cut, all the data is already in place. Inflation, everything is known. So from now to February, you're not going to be any the wiser. It's only the currency which can throw a googly. My sense is that Trump's announcements will be in the first week. We will have relative calm in February. So a rate cut is not to be ruled out at this juncture.
Let's hope for a relative calm in February.
Well, to cut or not to cut is the big question. Well, I guess we'll know the answer in February from the new RBI Governor. Latha, thank you for joining in on that segment for the WPI. Time for a short break. Back to the markets on the other side. Stay tuned.